Hi everyone, I hope you're all doing fine and well today. And as usual, in this video, we're going to quickly discuss the market sentiment. Okay, we're going to talk about the COT data, the institution positioning. We're going to talk about the top trade setup. We're going to talk about the economic calendar. And then we talk about my top trades, the trade I have running right now. And then I will do a little bit of trade recommendation. I'm going to recommend some trades to you. If you're interested, you can trade them. If you're not interested, you can go for the one you actually have planned for the week. And that's more like it. And we're going to do a quick wrap up. Don't forget to subscribe to my YouTube channel. Don't forget to follow me on my socials. All right. And that's more like it. Let's get straight into the video. So first off, let's start with the COT data right here. As you can see here, you'll notice that we still have, this is the COT net position. All right. I'm going to be really quick right here because I don't want to waste much of our time here. And you can see on card right here, we still have around below 20%. Okay. Long contract by the Feds or by the institutions, excuse me. Meaning institutions, majority of the institutions are still, the institutions are majorly still shorting card. They're shorting Swiss. They're also majorly shorting Aussie and Kiwi at the same time. All right. So this currency are still staying right below here. Mind you, when you look, these are the institution positioning. All right. If you look at the economic surprise meter right here, which seems to be loading up right now. All right. When we finally come back, we're going to get back there. All right. You will notice that the economy as it stands right now, card is on an average. Swiss is getting weaker. Aussie is also pretty average. Kiwi is strong. All right. Which is why I'm buying Kiwi yen, excuse me. I'm buying Kiwi yen. I'm buying pound yen. I'm also buying, I'm buying pound Swiss as well, pound Swiss, which is actually very good because you can see it's the general institution positioning right here, the net COT positioning right here. You can see for pounds, we have institutions still holding around 60% long. And on Swiss right here, you see that institutions are generally short, okay, which is around, they're just buying like maybe less than 20%, which is very good for my pound Swiss. But the deal about this whole thing is that it doesn't affect the market immediately, okay? It doesn't affect the market like the way you would want it to. The same thing that happened for the retail sentiment, okay? These are just the way the institution relate to the market based on their own long-term position because they are holding this trade for like, it's edging, all right? They leave it for like a long period of time, maybe months, maybe years. They just add every now and then. They remove, meaning they close some of their long contract or some of their short contract, and sometimes they add to it. It doesn't mean it affects the market like immediately. So we don't need to sit or sleep on that. I think let's take a look at the economic surprise meter. Yes, so it's back on. So you can see right here, dollar seems to be generally weak. All right. Generally weak. 38%. And I don't blame it. Okay. When we get to the economic, US economic hit, and when we take a look at all those indicators one by one, you see why we have what we have right here. If you look at Gbp right here, which is pound, you see that 86% strong. Okay. Euro is also 87%, which is more like a little bit above average, but it's fair. Yen is back to average. Initially last week, we saw around 67% strength. All right. But right now, possibly due to the NFP data that came here last week, and also the average hourly earnings and the unemployment rate that seems to be kind of like dazzling. It is not strong and it is not weak. All right. Unlike the inflation that keeps crashing in the United States, whereas Fed are still kind of like sitting on their hands. All right. On the interest rate cut. Okay, so that in the United States economy is not super solid right now. I'm going to give you that. You look at the Kiwi right here, NZD, so it's 88% strong, which is very good. CAD is 3% strong. I guess that is good. Okay, very good right there. We have Aussie also at 50% neutral. It's literally neutral. And then we have Swiss, which is getting weaker as time goes on. All right. So CAD yen is one of the pair I'm looking to buy moving forward into this week. Okay, it's one of the trades I'll be recommending to you. So let's just sit tight and watch till that time. Okay, so this is what we have on the economic front. Let me click on economic heat map, US economic heat map, and wait for that to load up while I talk about the latest weekly COT buy and sells. All right. So first off, we have US dollar right here. You can see that both long and short contract was closed. All right. And when we take a look at NZD right here, you see that long contract was open and small of that short contract was closed, meaning institutions are buying more into NZD. That's good. Australian dollar right here, you can see that both long and short contract was opened. All right, so they're having to go their long and short contract. I mean, if you're the kind of trader that thinks this is how to really trade, like you want to trade COT filings, it will be very complicated for you. Okay, that's why you have to implement all these things. You have to factor them into your technicals so you can make solid decisions. Okay, you don't look at this and just be like, okay, this is buying Aussie. Which one are they selling? Let me go and trade. No, you might end up blowing your account or maybe losing money. And you could have just avoided it and trade the technicals, mix it with market sentiment, make it with fundamentals, and make a very good decision from all those data. If you look at Euro right here, you can see that both their long and short contracts was also removed. Okay, they closed some of their short and some of their long, okay, which is pretty good. And lastly, we look at pound right here. Both long and short contract was also what was also added right here, which is also pretty good. All right, pretty good. CAD also, what is going on over there? They closed some of their long contracts right here, and they opened some. They added to their short contract, which is really good. That means they are heavily shorting CAD, and that's why we saw it that it's one of the weakest right here. I see the net positioning right now for long is around 12%, awfully small. It's actually the lowest in the whole COT findings that we can see right here. Is the lowest among them. The short is around the short percentage is around 87%, which is awfully big. All right. If we take a look at Japanese yen right here, you can see that we are seeing a big chunk of new short contract added, while some of their the long contracts are also closed. Okay, you can see right here we have 10,000 new short. That means institutions are shorting yen right now, possibly because the inflation is now getting way too higher than normal. Okay, than their target actually, and then the Bank of Japan is also kind of like in the middle right now, not knowing if they're going to proceed and and hike interest rates, or they're just going to leave it alone. But I'm very sure whatever the United States Fed decided to do would possibly affect how the Bank of Japan move forward. Okay, probably they're going to hike or they're going to leave it alone. But for now, we don't know. All we knew is that in Europe, ECB actually cut 25 basis points last week, which is like the 11th time consistently that they'll be cutting rates. 11th time. So that is crazy. All right, that is crazy. But as time goes on, we're going to see, and that's another reason why we saw a super weak momentum that resumed back to the euro. Okay, to the what's it called again? To the eurozone, or let me just say euro as a currency. Okay, so let me quickly wrap up with gold right here on the sentiment, and then we jump straight to the other part of the US economic data that I want to talk about. So right here, you can see on gold, new long contract was added, which kind of like put gold on my radar. Okay, I will be looking to buy gold moving forward. You can see that the net long is 80%, and the net short is 19%, which is still awfully or pretty good in my personal opinion. And this is everything right here. You can see the strongest one so far. US oil, Dow Jones. Okay, we have the US oil, we have the Dow Jones, we have the South African rounds, we have silver, and then we have gold. Excuse me. We have US oil, we have Dow Jones, we have South African rounds, we have silver, we have gold, and then we have Japanese yen. Those are the strong currencies right now. They are above 65%. Okay, they are above what? They are above 65%, which is very good. Okay, the other are below 60, 65, thereabout, and the rest is just a lot. But currently we have dollar keep reducing. Okay, the momentum keeps dropping, while pounds and euro keep increasing, as you can see right here. Okay, you can see how this thing also moves. All right, like that slowly. Okay, so that's how the net positioning looks like, and that's the latest update we have on the COT filing, the latest COT filing, and the COT net positioning in general. Now let's take a look at the US economic data. Taking a look right here, you see that so many things is happening to the United States. Okay, so many things. In May 29th, we got a quarterly GDP got missed, okay, by 0.1%, which is quite decent. Just to give DXY a little bit of strength, just to jump up. All right. But that is not about enough, considering the tariff uncertainties, considering the war between US and Houthis, or let me just say Yemen, and considering the hit between US and the resurface, or let's say the resurgence or the resurfacing of the trade war between US and China. Trump kind of started that last week or last 2 weeks, and every other thing that's happening in the US now, it's just making everything kind of tough for the dollar. Okay, at the same time, tough for the Fed to make decisions. Okay, although we have inflation, the CPI, PPI, and PCE, all of them getting dropped. Okay, they are declining, they're slowing down. It is good for the consumers, but it's not good for the currencies. Okay, inflation is going down, fine, but that is good for the consumers, but it's not good for the currency, and that's why we saw dollar just keeps declining, and the Feds are not cutting rates. So no more serious investment is coming to the United States, and people are also kind of like just spending, they're not putting money in the bank. Okay, when you have lower inflation and high interest rates, what do you want to do? You want to spend your money. You don't want to put it in the bank, okay? Or you don't want to borrow money more, all right? So all these things are the reason why we have a little bit of a lower trajectory, or let me say a bearish move on the DXY itself. Now, taking a look at the job data, it's not looking very good right now. We have wage growth. Wage growth increases last week, by the way. Okay, increased to 3.9%, which is very decent, slightly decent. Unemployment rates remain the same. Unemployment, the initial jobless claim came higher than normal. And also we have ADP also came quite bad, okay, last week. And then the job opening also came pretty good, all right, meaning there's some new people that got employed, so to speak. And the non-farm payroll also came slightly higher than expected, which is also fair. So we have bad inflation, okay? Yeah, literally, inflationary data is bad. We also can see right here the economy is also not getting boom. GDP is terrible. We have manufacturing PMI also bad, service PMI bad. So the economy itself, the US economy itself, is not good. The echo, okay, manufacturing PMI, the service PMI, and the GDP, okay, it is not good. Also not good. And then we have the labor data. Okay, labor data is the only thing that seems to be what to be holding the United States economy strong for now. The labor market seems to be on an average. Okay, on an average, it's just mildly like surviving. Let's just say the US labor market is surviving right now. Okay, and it seems to be the only one carrying the economy. Although inflation is at the rate at which the Fed want it to be, which is around 2%, is very close to the target, but it's not the target yet. But still, inflation is going crazily to the downside. Interest rates remain the same. Okay, because why? Economy is not booming. Tariff uncertainty, endless war, wasteful government spending, it is not helping for now. So what do they have to do? I think it's either miracles start happening, or maybe inflation starts going back up, and then Fed has to cut rates. Something has to happen for the dollar to actually find its way back to the upside. All right. And when we get to the chart, we're going to talk about DXY and how it looks right now. Okay. So lastly, let's take a look at the top setup right here on H-Finder. First off, we have Nzdjpy. I'm on the buy trade on Nzdjpy, and you can see very bullish with 11 score. We have Gbpjpy right here. Also, I'm looking to buy Gbpjpy. I should have taken a buy last week, Monday, but I'm just chilling because I took some very early entry on USDJPY last week, which didn't really work very well for me. So I had to cut some losses on that one. So I'm looking to recommend Gbpjpy as one of the trades I will be looking into coming this week. I mean, as we enter this week. Pound yen also bullish with a score of 8. I'm also holding a buy trade on pound yen. Swiss yen, I have my highs on Swiss yen, but I'm not super solid on the strength of Switzerland. Swiss franc, literally. I'm not super solid on the Swiss franc strength as a currency. I'm not super strong on that. That's why I didn't buy Swiss yen. Okay, considering that yen is similarly strong. Okay, every single day, just keep going up gradually. Okay, from 38% jump to 49%, jump to 55%, and now we are seeing Japanese yen is still loading up. Okay, it's gonna come. Japanese yen around 50% right now. Okay, the last time I checked, which we checked together some time ago, around 50%. It's still coming up. I don't know why. Maybe it's my internet. All right. So euro dollar is also bullish. I'm not really interested in anything dollar right now. Genuinely, euro dollar, pound dollar, Kiwi dollar, Aussie dollar, anything US dollar, I am so not interested until something happens. Okay, and I will tell you when we get there. Okay, so euro dollar, I'm not interested. Pound dollar, I'm not interested. Euro yen looks good, but I'm not super strong on the euro currency itself. That's why I won't be taking euro yen. Aussie yen, I'm also not super strong on Aussie yen because I actually have a bearish bias on Australian dollar. So I'm not going to go against that bias on Australian dollar. So I'm just going to leave it alone. All right. CAD CHF, I am not in this, but I will look into buying CAD CHF going forward. But it's not going to be one of the trades I'll be recommending. But if you have any technical setup that makes sense on CAD Swiss, I want to look into that. Probably you want to buy it, okay, or something like that. US oil, yes, I'm going to recommend this one to you. So we're going to talk about that. Like I said, Kiwi dollar, Aussie dollar, I'm not interested in any of this, okay? Anything US dollar right now, I am staying away. And that's another reason why I'm not buying USDJPY, even though it's at the very bottom. I mean, I took some buy, I made some money. Then last week, I took some buy that didn't really play very well because the market from the top that it went to a week before last came all the way down throughout last week. That was like everything for me. I was just gone. Okay. So until we get a break above some structures on US dollar JPY, for now, I am not interested in anything dollar. Aussie Kiwi, I'm shorting. I'm looking to short again. Euro card, I'm looking to short. Aussie card, I'm not sure I have anything on Aussie card. Well, yeah, I have something on Aussie card. We're going to talk about that, but they're all bearish right now. Pound Aussie, yes, we're looking to short. Euro Kiwi, excuse me. Pound Kiwi and Euro Kiwi, we are looking to short, so we're going to see how that goes. You can see they are still very young, -6 and -5 score. So they're still pretty young. So we're going to look into them one by one. But I'm going to recommend Euro Kiwi, Aussie Kiwi, and Euro card to you. But Euro card is more like a long-term game, okay, for people that are ready to take that long-term trade. All right, lastly, let's take a look at this again. So you can see right here, we have dollar strength is at 38%, pound is 86%, we have euro at 57%. This thing didn't come fully. I don't really understand what's going on. But you can see euro is 57, and yen right here, which is supposed to be there. I don't know why it's not going, why it's not coming. All right, it should be around, I think, 50%. Okay, you can see the closeness between both currencies. So I'm not really interested in that. And Kiwi right here is 88%. Okay, we have CAD at 83%. Another reason why I'm looking to buy CAD JPY. All right, possibly. but I'm not sure yet. Like now, Aussie yen, I'm not interested in taking that Aussie yen. You can see Aussie is 50%, yen is 50%. 50% was 50% when I checked last time. So that's what I'm saying is 50%. But you see how it goes, okay? I'm gonna probably refresh the page and see if we can come back there and just to show you what yen is talking about. But right here, lastly, it's on economic calendar. You can see on the economic calendar right here, we have almost holiday tomorrow, Monday, because why not? There's holiday on Friday, then definitely the holiday is extended to Monday, so people can really refresh and get back to work on Tuesday. On Tuesday, we have average hourly earnings in the UK, then we have the initial jobless claim in the UK as well. So the initial jobless claim is expected to actually rise to 9.5k in the United Kingdom, which is not going to be very good for the economy. But then we have average hourly earnings. So average hourly earnings is also expected to drop by 0.2%. That's also not good. These two data, if they actually come as expected, which has already been priced in, by the way, but if they came lower than these, if the average hourly earnings came lower than 5.3%, and the initial jobless claim came higher than 9.5%, that's going to take a toll on the GBP, okay, on pound. So I hope this doesn't happen because I'm still pretty strong, pretty bullish on pound for now, by the way. Okay, so on Wednesday we have United States inflationary data coming in hot. Okay, we have the CPI month on month, the CPI year on year, and then the core CPI, the CPI month on month, and the CPI year on year also coming. You can see right here the CPI, the inflation is expected to actually start going up. Especially this underlying CPI right here, which is the CPI year on year, is expected to go up by 0.2%. I guess if that happens, we can start seeing dollar sign going up gradually. Maybe, all right, maybe. I'm not sure if that's going to happen, but it's possible. Okay, it's pretty much it is pretty much possible. Then the next one after that is we have the GDP. On Thursday we have the GDP month on month in the United Kingdom. It's expected to drop. Oh, all this data coming for the United Kingdom next week are not looking very good. This might take a toll on my pound CHF trade and pound yen. Okay, I'm not really liking this. Okay, personally, I'm not really liking this. But let's see how it goes. Okay, we never can tell. Okay, if the GDP comes just as this, it's already been priced in. Probably we're going to see a minute drop and the market will tally back up. All right, but if it comes lower than that, probably like negative 0.5%, that's going to take a toll on the pound pairs. All right, it's going to drop possibly. And then after that, on the same Thursday, we have core PPI coming. All right, the month on month and the year on year is also coming. Core PPI and the PPI month on month are all coming. For the United States on Thursday, we're going to see how that goes. All right, it's also expected to be hot. All right, I can't see the PPI year on year here. I don't know why it's not here, but I guess we shall see. All right, but they are forecasted to be hot. I hope this happens so that dollar can gain some strength, and I can take that short trade I've been willing to take on euro, dollar, pound, dollar, and the rest. But let's see how that goes. Okay, moving forward, and the initial jobless claim that comes every month. I mean, every Thursday is expected to probably come just as previous. Okay, without much of difference. So we're gonna see how that goes as well. But I'm really interested in the United Kingdom economy. I mean, data that are coming this week, I say, because I'm bullish on pound. Don't forget. Okay, I hope these actually come pretty decent and support my bullishness on pound. And this one, the GDP actually come probably higher than this, so we can get another bullish and an hawkish reading on this data. But whatever happens, we're gonna figure it out together. I'm gonna see how it goes moving forward. All right, so that's that on the economy. Let's take a look at this again. It's not loading. I don't know why. I guess that's that on that. So anyways, now let's take a look at the chart. Let's start with DXY. So taking a look at DXY right here, you will see that the bearish trajectory is still very much there. Nothing has changed in the past since May, literally since I want to say since April. All right, it's been like this. All right, it's been very weird for the United States dollar. Okay, so you can see right here, dollar is still awfully weak. Okay, and I guess if and only if it breaks above here and pull back, that's the only time I will remain bullish on this one. However, if it breaks it downside right here and drop and push up a little bit, all right, like this, I would remain. I will join the winning team and I will start selling dollar personally, because I've not been buying dollar, neither have I been selling dollar. The last time I bought dollar was on Nzdjpy right here. Okay, I closed all this trade already though, but while that loads up, let's take a look at this. You can see what I was talking about earlier. Okay, you can see dollar is still 30%. It's pretty weak. It's actually the weakest among all of these currencies right now, all of the major currencies, the 8 major currencies. Dollar is weak, 30%. Pound is 86% strong. Euro is 57% strong, which is why I'm buying this. Okay, you can see yen is awfully like neutral, 50% right there. Okay, Kiwi is 8% strong, which is still the strongest among all this currency, and that's why I'm buying Kiwi yen as well. CAD is also like pretty strong, 30%. Another reason why I'm looking to buy CAD yen. All right, I think it's one of my top 3 setup plan. Yeah, it's one of my top 3 setup, and trade recommendation I'll be giving or I'll be sharing later. Aussie is neutral, so I'm not touching this. Not even Aussie yen, anyways. And then we have Swiss right here with 40% strong. That's why I'm not buying Swiss yen. Okay, because of what? Because the Swiss is even weaker to yen. Okay, the economy in Switzerland is quite weak compared to yen because why not? They've been cutting their interest rate. The economy is not really booming like that, and then the inflation is also kind of like the lowest so far. So it's crazy right there. It's crazy out there. So I'm not really interested in Swiss right now. But the same even attribute of Swiss is really helping because when you have uncertainty around the globe, you have uncertainty in the forex market, meaning dollar is not really helping the matter. Trump is really just going at everything that we all know to be true are beginning to look like they're not true anymore. All right, so people rather just put money in Japan or put money in Switzerland because it's more safe out there, okay, than the dollar that everybody loves. And like, you get what I'm saying? That's why we're seeing all those crazy pump on Swiss dollar. Crazy pump on Swiss dollar, Swiss yen, because not like Swiss is actually strong like that. It's just because of the sentiment between that surrounds the safe haven assets and safe haven currency in the market. Also, gold and Bitcoin inclusive. All right, so that's that on that. Now let's take a look at this. You can see on the yen pair, I took a buy right here some times ago, and around there, it got to this region, then it jumped back. Okay, I took another fresh buy, which actually was too pressured that I couldn't hold on to it. I had to cut the loss, all right, so I can give room for more trade like yen, Kiwi yen, and the pound yen to run, all right. So I caught that dollar yen, and right now I'm not even interested in this anymore. I didn't take this trade, I say, okay, I'm not interested in dollar yen right now. The only thing that would make me take a buy on dollar yen is if I get a break above this region and I get a pullback. Then I can go buy on right here. Why? Because dollar is awfully weak, guys. Let's not get it twisted. It's actually fun and it's really good to try and take the bottom right here. Okay, this particular bottom is fun, it's nice, it's beautiful to take the buy from the bottom right here. But then it's always going to be pressure. I said it in my previous video. It's fun, right? It's fun, but it's going to be a lot of pressure. And if you're putting your stop loss below here, it's going to be a gigantic one, maybe around 400 to 500 pips. So it's crazy. Okay, why not just wait for break above here, pull back when you get a better entry, then you can ride it to the top. Probably the new all-time, considering that dollar is back to being strong. All right. So we've talked about that. We've also covered DXY. Now let's talk about my open position. I'm going to be starting with Eurgbp. Right here, I'm shorting Eurgbp, and why not? Okay, why not? Euro is like 57% and it's reducing gradually. Speedily because of the ECB monetary policies and everything. Okay, and considering what's going on in the United Kingdom right now, the economy seems very sweet and strong. So I think this actually makes sense. However, if this now happens to actually break above here and come back to this region and we have to the trade and we see if I can DCA it, okay, to see if it can drop further, okay, all the way down here. This is a ranging pair, alright, so I'm not really expecting anything super serious from it. And we check back in time, it's already bearish, okay, it's all fully bearish. All right, so I would just love to see how this goes moving forward. So that's that on Eurgbp. The next pair is pound CHF, okay, which is right here. On pound CHF, I can see the momentum is building up quite nicely, but it is also very weak and is a range pair. Generally, sometimes I ask myself, how did I get to pairs like this? All right, and the reason is because dollar is not giving. Dollar is not giving. When I have currencies like dollar that is not given like this, I tend to just navigate towards this very weak, very slow pair. All right, and the yen also it's just a lot of mess right now in the market. So you just have to be careful. Take what you can, protect your capital, and just keep going at it. All right, that's why I'm still holding this pound CHF trade. But so far so good. We have some very nice momentum. So there's still high possibility to the upside right here, based on what we've seen again. Okay, pound is very strong. Swiss is leaning towards weakness. All right, so that is another reason why I'm still in on this trade. Okay, but as time goes on, we're going to see how it goes. Okay, then now pound Kiwi yen. Yes, on Kiwi yen, I'm holding a buy trade. I've been holding since last week. It's actually a very fancy trade and it looks absolutely good. Okay, I'm actually hoping if we can get this high right here, if we can get it taken out. Okay, this particular high right here, we have it taken out and we get a nice and decent pullback again. I'll probably add to this trade and see if I can ride it all the way to the upside. Okay, but right now, there's still some pressure. Okay, there's still so many pressures that could hinder this trade from rising higher and higher to the last day. Okay, I'm just kidding, but you know what I'm trying to say. Okay, there's still a couple of pressure that I need to prepare myself for. I need to wait on. Okay, just to see how this goes. But this looks absolutely good moving forward. Pound yen also, I'm currently on a buy trade. Another reason why this is also a very risky trade or a very pressured trade is because of this high right here. We've seen it multiple times. The market go here, bounce back, go here, bounce back, go here, bounce back. This is the first time. 1, 2, 3, 4. This is the first time we're going to be getting a retest of this particular region. This is around 195, right? Yeah, 195.904. All right, that region right there is a very, very significant resistance region. So we might get it broken next week or this week that we've joined, that we've started today. Today's Sunday, by the way. All right, or maybe it's just going to pull back and just going to get rebounded and probably come to the downside moving forward. But right now, I'm looking into it and I'm watching it very closely, and it's in a very good profit as well. Lastly, on the trade I'm holding, I have AUD-NZD. AUD-NZD looks very good. This is like a 2-week trade already. Okay, I've been in it since the 16th. No, since the 20th of May. So I'm looking to have some more trade right here. I've actually not opened this trade. I was thinking I'm going to open it on Friday, but I was quite busy on Friday. So probably by the time I can open tonight, I've had a short trade to this one to see if we can get it all the way down here. Don't forget, Aussie is not awfully weak. All right, but it is neutral right now. You can see Aussie right here. Aussie 50% strong. Okay, it's 50% neutral, and Kiwi is awfully strong. So that's another reason why I'm looking into buying and into shorting Aussie Kiwi. All right, now let's jump into my trade recommendation. All right, and then we're going to wrap the whole thing up. Guys, don't forget, on this trade recommendation, if you're looking to trade this with me, you can always slide to my DM and request to have access to my Signal page or my mentorship group. And if you want to join my free Telegram channel, the link is always in my bio. You can give it a shot. I will share some of this trade there, even my trade recommendation. And maybe you make some money with it. Definitely you're going to make some money. But sometimes, you have to apply this money, because don't forget, this video is not a financial advice all time. Okay. Now moving forward, Aussie card. If you take a look at it from the back, you'll see that we are retesting a very strong resistance zone. Okay. We retested a very strong resistance zone. 1, 2, 3, 4, and 5. All right. And every single time the market retested that region, what happened? It dropped. Okay. So now the plan is to see if they can drop back down here. Then maybe we get another push there outside. All right. So that is the plan on Eurgbp, and that's what I'm looking to short. But like I said, this is going to be a really, really long trade. All right. It's going to take a while. It's going to be a soon trade. So if you're a day trader, you might want to be careful shorting this. Okay. But I mean, once we get a break below this region, it's a good goal for me. All right. Break and a pullback. It's a good goal for me to short, and I will be targeting this particular trend line right here. Okay, this particular trend line. That's where I'll be targeting. So, like I said, it's a swing trade, so I want to be very careful and cautious on this one. So that is that. And again, why do I want to go for short Eurgbp? Euro is what? Euro is 57%, and it's still diminishing, still decreasing very fast. And CAD is currently 83% strong, and it seems to be increasing very, very fast. So that's another reason why it's cool to take this trade. And then Aussie CAD also, I'm looking to short this one as well. Again, let's take a look at the economic meter again. All right, Aussie neutral, CAD bullish. All right, as a matter of fact, I would say it's very bullish. It is around 65 now. I would say bullish. But when you have 83%, that is very bullish. All right. So the economy in Canada is pretty strong, and we have the economy in Australia reducing drastically. I mean, it's just very solid to just take that short. And when you look at the trajectory of this movement, of this chart also, when you look at the trend, it's very, very much bearish, right? I mean, we have high here, we have low, we have high, we have low, and then we have a fresh new high right here. But you can see everything is the lower high, okay, lower high, and then the new lower high. Okay, you can see this is higher than this is higher than this. You understand what I'm saying? So there is a trend, and that's why we have a trend line right there. So the trend is bearish. So far, even bearish, I will keep selling until the last day, unless it breaks above this previous high. This two high. If it breaks above here, then I'll probably start buying. Or anything below here, I only look to short, and that is how I trade. Follow the market momentum. The signal you're looking for is on the chart, but then consider looking into what the economy. And when we take a look at the economy right here, what do we see? We saw a very solidified divergence. Aussie is neutral, CAD is strong. You have your answer. Simple stuff. Okay, so moving on to the next one, which is going to be pound Aussie. Now, when it comes to pound Aussie, I am not I'm not a big fan of this pound Aussie pair. I will say that. But then I am looking to long pound Aussie. It's not even among the top 3 setup right here. Pound Aussie is not here. Okay, But some time ago last week, we saw it at very bullish. And right now, I would say that I have some very decent plan on this one. And I mean, some very good entry plan. And the market can come all the way down here, 50% Fibonacci, I will probably consider buying. Okay. However, if it comes way further to the downside and potentially we tested this trend line, I will also have to the trade. Okay. But I will be very careful now I put this one. So watch out for it. Don't join right now. Don't let FOMO push you into buying right now. Okay. Wait for it. But then another thing you need to pay close attention is when this market is going up, it moves very fast. But when it's coming down, it is very slow. All right. You can see all the way from the back. Okay. Yeah. I think sometimes it moves very fast when it's coming down too. All right. But when you consider it, the rate at which it moves to the upside is not the rate at which it moves when you move to the downside. That's how you know a very good trend. Okay. You can see this is a very bullish trend. So you don't have to go against the trend. Just follow it until something breaks. And by something, I mean the structure is broken. So on this one, I'm looking to buy a pullback to this region one, go for it, or a much deeper pullback to this region on it. I go for it back. Simple stuff. All right, doesn't have to be complicated. The next trade recommendation will be WT high, which I will be looking to buy. I told you in the last video I recorded, I said this is no trade zone. As you can see, the market is ranging right here. So no trade zone. Now we're seeing that on Friday, the market broke above this resistance. The plan is still pretty much simple. Wait for a clear break of this trend line, a nice and decent pullback, and then we look into buying US oil. We target this region first, around that $75 per barrel, and then we target 84 region also. All right, 84, 85 region. So these are my two targets level. But then I have to look for entry right from maybe 65 or maybe around that $66. All right, so the return can be much decent and the stop loss can be quite smaller. All right, so that's the plan on the retail. Just keep a close eye on it. Before Monday, Tuesday, we should have an answer. It's either the market continue this momentum, okay, all the way to the upside, or maybe it just get rejected from the top right here and then continue to range. All right, so that's the two way I see this playing out. And lastly, this is also like a possibility. If we drop the downside right now and start selling, that also very possible. But right now, I'm staying quite bullish on US oil. And why again? We also have it written right here. US oil is bullish with a score of 6 right here on Edge Finder right here. US oil bullish, score of 6. That's also pretty. Another reason why I'm also like leaning towards buying WTI. Another one is CAD yen. Told you about CAD yen. I have a buy opportunity on it that I'm watching. I've been waiting for. I could have buy this or I could have bought this when I bought Nzdjpy. You can see broke this trend line, this very trend line. Brokered. We tested this region multiple times. That 103 region tested multiple times, and now we see it's retesting this particular region again. All right. I don't want to rush into this. That's why I'm holding my peace. And don't forget, these actually look awfully similar to what we have in Nzdjpy. So why would I buy Nzdjpy and still buy CAD yen? It doesn't make sense. All right. So the plan is to see if we can break above here, decent pullback to the downside. We're testing this region, which was previously used as support, then turn to resistance. Now I want to use as support again. So we can do what? We can look for buy. And the target will definitely be around that 111.50. Okay, it's not going to go beyond that. That will be my target because all this region right here, I don't think they have anything to do. But as time goes on, I'm going to trade, I'm going to have to the position, we're going to start going to move forward. But on CAD yen, I'm pretty much bullish, and that's how it's going to stay. Euro NZD, I also recorded a video on this one last week, Wednesday, I believe. I'm looking to short this one again. Why do I want to short it? Okay, you should know what I'm going to bring next. It's going to be this, okay, the economic surprise model, which just seems to be running. Okay, thank God it's back up. All right, we have, where is it? Euro, 57%, partially bullish. All right, and then we have NZD right here with 88%. And Euro is expected to probably drop some point into this week as we move on. So we're going to see how that goes. So that's that on Euro NZD. I'm still looking to short, break below here, pull back nice and easy. I will short this one to the downside, okay, to maybe 1.840000. All right, that would probably be like another 1,000 pips, I guess. I'm not sure how many pips this will be. Let's take it out. That should be around 400-500 pips, give or take, which is very good. All right, which is very, very good. Okay, and yes, I have something on Bitcoin as well, which is going to be the last one I'll be talking about today. I'm not touching gold for now. If you're expecting me to talk about gold, I'm so sorry. For now, I'm not touching gold, but let's see if I can analyze gold for you. I'm just going to push it up a little bit, and let's see if I can talk about gold. Now, I took a counter trend trade on Bitcoin. I'm going to show you the screenshot later. All right, I took a counter trend trade on Bitcoin, which was very good. I shot right here. I saw it was slightly above there, and it actually did very well. Came back down to $100,000, right? Because of Elon and Trump, break up. It's eating the market. There's a lot of turbulence right now. Trump is saying a lot of things. Elon is saying a ton of things. So everybody's trying to dissect what happened, what caused the breakup, there are two brothers, two besties that end up breaking up. So it's something we need to analyze because whatever both says, the richest man in the world and arguably the most powerful man in the world, when both of them are having a fight, the markets, we traders, everybody will get affected one way or the other. And that's why we're trying to dissect it. And I'm very cautious on Bitcoin and gold and everything involved. You see, that's why I said I'm not related on gold and Bitcoin. But anyway, I have something on Bitcoin. If Bitcoin breaks above the 107 region at the top here, we can probably add to the buy trade on Bitcoin for now. But it's not recommended on Edgefinder in any way possible, in any form or shape. I'm not sure it is right here. There's no Bitcoin here. So that's another reason why I'm not considering anymore. Okay, I'm not considering buying it anymore. But let's see how that goes. Okay, it's not bearish, it's not bullish. I'm gonna sell Bitcoin. It has to be below here, below 100k. All right, that will be the only reason why I'll sell. But anything around here, I'll probably buy, and then I'll have more buy if it breaks above that 107 region. And then, we can target 120k as time goes on. So many people are still believing in 130, 160k of Bitcoin before the end of the year. If that's going to happen, I don't know, but I would love to see how it goes moving forward. And lastly, gold. Gold dropped yesterday, last week Friday. It dropped massively, which is something I love. Why? Because I'm not going to be the guy that bought gold at the top here. That's what I'm going to buy. I'll probably buy around this region, which is 300, all right, so to speak. Did I buy right here? I buy it right here. But the moment it breaks this trend line, I would chill a lot. Okay, I would chill a lot. Okay, but for now on gold, two things have to happen. I need to see this region right here. Okay, and then I want to see it on Edgefinder as well. Okay, I want to see it maybe with a score of 7 or 8, and then I want to hear some good things on the economic front. Okay, what's going on? Where is that pressure coming from? Probably Trump and China is back at the trade war. I would like to hear that to support the momentum. You know what I'm saying? When there's uncertainty, assets like Swiss, yen, and gold tends to pump. All right. So that's what I'm looking for. But as time goes on, we shall see, and we see how everything goes moving forward. So that will be the end of my trade today, of my analysis, of my software setup, to recommendation, guys. So please ensure you trade safe. Don't get margin called. Protect your capital at all costs, and stay safe, stay cool, and stay informed. If you have any question, you can always drop a comment. If you want to contact me, my DM is always open. I'll see you in the next one. Have a fabulous week.